Do you think that risk assets have taken away the right messages from the Fed? Or to pick up on what you said earlier, do you think we won't know for another week or so?
I think they've absolutely interpreted the Fed correctly. I think there's been some pushback out there like, oh, wait, the Fed was hawkish. No, there are no more hawkish than we expected. We talked about yesterday, what happens if the Fed is hawkish, but the markets interpret it as dovishly? That's exactly what has happened. I think the change and the reaction function since the Fed entirely makes sense. Now, what I do push back on is where we were going into the meeting, the central premise that the Fed is going to cut aggressively later on this year. I think that only comes when we get a deep recession, and other assets aren't priced in that deep recession, so there's still a contradiction out there.
OK, so are you any clearer about where the terminal rate is and when we hit it? And crucially, whether we see any rate cuts this year? The market seems to still be in disagreement with the Fed on that.
I don't think we got any new news yesterday. I think, the Fed reiterated the fact that they will be data dependent. They will react quickly. They just opened up the fact that they're going to react in both directions. They're not just stuck stubbornly on inflation. I still think we get the terminal rate above 5% as the Fed promised in December. Exactly how high we go, I don't know.